Welcome, everyone. You're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance, and much, much more. I'm Joe David, the founder of Nephos Group in Minor. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now on to the next episode. Hello, everyone. Welcome to the latest episode of the Nephology podcast. Delighted today to be joined by Rayhan. How are you?
I'm good. Thank you very much for inviting me.
No, thank you for coming
Especially
along.
when Bitcoin went to 100,000.
Yes, I feel privileged that you noticed that today for me. You're not the first person to say that to me today. A couple of people have talked about, am I gonna party tonight? And
Well, I remember you once telling me, or not telling me, we were in a conference together, and you told me that every one of your staff has a crypto account, right? So are they all like millionaires now?
Unfortunately, do you know, it's one of those things, right, where, you know, employees get like share options or whatever in a company, and then the company goes parabolic, and then all the staff can retire because they've all made all this money. Yeah, it wasn't quite like that, but they all bought tiny little bits, you know, 0.001 here and there. So maybe they've all got £100 or something, but thankfully the team haven't retired. we've still got a business. So, but no, it's like starting on that point. It is a historical moment. You know, there was a lot of people that, and the interesting thing as well was as of recording right this second, it hasn't dropped straight back down. There was a lot of people worried that it would hit 100 and then there'd be a huge sell off and it would come straight back down. It's held up quite nicely. So, good old Donald Trump for you, that is. I actually thought we weren't going to talk about crypto on this episode. I thought it was going to be maybe one episode I didn't talk about crypto, but I don't think that's going to happen.
Sorry,
So
I couldn't help it.
yeah. Rayhan, obviously we know each other very well, but for those that don't know, maybe tell a little bit about who you are and where you're from and what you do.
Yeah. So my name is Rayhan, born and raised in the UK. Came to Dubai back in 2016. Set up the accounting business, been doing that for quite some time, and then recently set up Taxstar. So Alphapreneurs is the accounting business. We do bookkeeping. You know, you're my crypto guy, so whenever I get any crypto clients, you know, they're coming to you. Yeah. Taxstar is more of a tax technology company. So we're building corporation tax software. So accountants like yourselves, myself, you know, we can make our practice more efficient. You know, we don't want to be using spreadsheets to do the calculations. We have a software. As part of the corporation tax rules, you know, you need to keep your records for 7 years. It's quite a complicated law, so there's lots of different kind of things you have to consider when you're doing your tax return. So, for example, entertainment, if you've got client entertainment, you can only deduct 50%. If you've got interest on a loan, there's only a certain amount you can deduct according to your EBITDA. And even in the law, they decide what that EBITDA number is. Yeah. So we're trying to make that simple. We're trying to automate it for accountants and accounting firms. So, you know, you guys can focus more on advisory rather than the number crunching and the calculations.
And it makes sense because, and we'll come on to lots of these points, I guess, during the episode, but, you know, the UAE, you know, as an accountant that is from the UK and somebody that's very used to technology being at the forefront of everything that we do, you know, I remember when I started the business 11 years ago, we used Xero from then, and there was a few banks that didn't have bank feeds, but even then the majority still had bank feeds, even if they were through a third-party Yodlee, I think it was back then. But they all had, but when you had to sign forms with like NatWest and HSBC, you had to print a form out, sign it, send it off to the bank. But anyway, but even then, 10, 11 years ago, we had bank feeds. We had, you know, things like Dex, although it was Receipt Bank at the time. And a lot of that doesn't exist here. Yeah. So for you bringing out a technology company in this space, in this sector, is that a challenge for you because accountants here aren't used to technology? Or is it the opposite? Actually, they're looking at you and going, you're like God because you've brought something that nobody else has.
I mean, for me, I'm solving a problem. I'm solving my own problem.
Yeah. Which is always the best problem to solve as well.
Yeah. So for me, it's about how can I make my firm more efficient and more productive? There's a global shortage of accountants. Like, it's very difficult to find good staff and good accountants as it is anyway. And I think in the future, what's going to happen is AI and automation is going to have to fill in the gap where you can't find staff to do some of these boring jobs. And this is what we're trying to achieve with Taxstar, where you're able to rely on a system to do the calculation, whereas you can focus more on the advisory, you know, increase your revenue from that point of view. I'm not a techie.
Yeah.
I'm an accountant. I love technology. I use, like you, I use Zero from day one in Dubai. Obviously, we've only got 2 banks that has feeds. But it's still very efficient. It's still a lot of our clients like it. It makes our processing more efficient as well. So for me, it's been a revelation. We've since day one we've been using Zero. We've been using Zero now, and you know, they are adding new features every so often. But we will obviously want to help the users who are using Zero, the likes of Zero and QuickBooks, to kind of have an automated process when they're calculating their corporation tax.
Yeah. And like you say, it's a complicated subject that, you know, even before we went on air, I've been picking your brain on a few bits and pieces because there's so many nuances, like there are with all tax laws effectively. You know, there are always these nuances, and, you know, you do sit there and think to yourself, if they simplified it so much, you know, surely that would be easier for everyone. But then when you look at the little bits and pieces that they do have those kind of technicalities on, they are different, and they do have to be different because you've got different businesses doing different things in different ways, and so you do have to be able to adapt it. But it would be easier for a lot of people if they just said, you know, X amount of profit, over that you pay 9%, no questions, no nothing.
Yeah, no, you're right. I mean, if it was simple, it would be easy. But then if it was simple, as you know, we deal with entrepreneurs.
Yeah.
So, you know, they're hustlers. They want to make as much money as they can, and so they turn to you to save money on tax, right? Now, obviously, our job is to make sure that they're tax efficient, right? And so simplifying it also means that there's more leeway for bad actors to kind of manipulate it as well, which
and bad advice to come in and
exactly. Well,
yeah, we've already seen enough of that already. So, cool. So let's dive into like, and I want, you know, for me, this conversation really, I want to kind of put around the kind of corporation tax piece to raise awareness and to give people that kind of, you know, I get a lot of questions all the time about, you know, different elements of corporation tax, and, you know, Dubai, UAE has always been known as a kind of, you know, low tax / tax-free jurisdiction. So, yeah, why don't you give us a kind of quick introduction to corporate tax here, when it came in, you know, and what effect it's having on people.
Yeah, no, more than happy to do that. So when I came, it was when VAT was brought in. VAT wasn't enacted in 2018, but the laws to that was, you know, was in development years before that. So at that point, you know, you had the Ministry of Finance, and you also had the Federal Tax Authority that was created to advise on tax. And so it was always on a roadmap to have corporation tax in there. I mean, now for a few years we've known that e-invoicing is going to come up, and now e-invoicing has been announced. So corporation tax, it was enacted in 1st of June 2023 for financial year starting at that point. And it's a rate of 9%, right? Now, there are certain intricacies. So, for example, if you are eligible for small business relief, then if your revenue is less than 3 million, then you don't pay any corporation tax. You still have to do a submission. You still need to do a return. In terms of if your revenue is more than 3 million or you don't qualify for small business relief, then you pay 9% tax on your profits. They threw a span in the works with free zones. And free zones is actually more complicated than the usual kind of tax laws for let's say a mainland company.
Just to jump in, you say they threw a spanner in the works. Do you mean by that? Do you mean that you didn't expect free zones to have the complexities that they have? Do you know what I mean? Like when were you expecting it to be a more simple approach to free zones, and then it came out and it was a little bit less simple?
Well, ideally, right? So anyone who has set up a company before the 1st of June 2023, many companies are setting up a business in the free zone, and one of the promises is 20 years free tax.
50
right?
years, I heard
50
they
years,
want,
yes.
yeah.
In some instances, 50 years. And so you're in the false security of you not paying any corporation tax. There's a lot of bad actors as well. So there's a lot of, sales people from business setup companies, and they're promising, to entrepreneurs, you don't have to pay any tax. But when you actually look at the rules and what the regulations are, in many instances you do have to be you are a taxpayer. And so with free zones, you kind of have to think of it from a point of view as what type of business you are. I mean, we can go into the details, but I want to make it pretty simple for the average entrepreneur to understand. And you got to think about what's the whole point of having a free zone in the country, right? The whole point of free zone is FDI, foreign direct investment. It's for companies to come into the country and to set up. For example, in Saudi Arabia, they have, if you have a regional HQ in Saudi Arabia, you don't pay tax, right?
Okay.
Effectively. I think it's for 20 years or so.
Okay.
So in the UAE, you're creating free zones for foreign direct investment. Now, when foreign direct investment comes in, what's the most impact that they will give to the economy? It's when you have, a company that is setting up a factory or manufacturing something. And so what they've done with the corporation tax law is those types of companies, they tick most of the boxes, right? So if you're manufacturing goods, or if you're producing something, and you're based in the free zone, then chances are that you are eligible for the 0% tax. HQs, headquarters, right? So the UAE would like to attract more head offices to come relocate here. Head offices usually have hundreds of companies as subsidiaries, and the profits go up. So, if you're paying dividends up to the headquarters company, then that's going to be tax free, right? So it's to attract that kind of business. Now, we deal with the entrepreneur who's probably, they've lived here all their lives and they set up a company, or they've moved from the UK, or they've moved from, India, or, the US, and they set up a business. And usually they set up in the free zone because it's actually easier to set up in the free zone than the mainland. And there's, they're providing marketing services, for example. And they think, yes, it's tax free. I'm in the free zone. Why do I need to pay corporation tax? But actually, because they're not providing, the activity doesn't allow them to be eligible for the 0% tax. They are treated as a normal tax paying company, which means they don't get the free zone benefit, but they have to submit, and they have to pay the corporation tax. There are obviously certain nuances, but just to kind of break it down, so to explain that,
and that's super interesting, I think, because what the clear message there for me is, if the business that is being operated in a free zone is directly adding value to the UAE, i.e., like you say, manufacturing goods here. I think is logistics and shipping one of the So all those that are driving activity to the area and economic value to the area, then there's a chance that you may have some exemptions, if not all exemptions, from corporate tax. If you're just a foreign person coming here and setting up a consultancy company and earning loads of cash that you stick in your own pocket and go and spend wherever you spend, chances are you're not going to get an exemption, which actually does make a lot of sense if you're a smart government to go, we want people to build here, but we don't want people to just come here, freeload, and then leave. So I guess that does, and the same with HQs. If you can bring a HQ here, you'll bring an economic value to a country. So that does make a lot of sense, I think.
Yeah, and obviously, if you're eligible for small business relief, your revenue is less than 3 million, then you don't pay corporation tax, right? And there's a threshold as well. So your first 375,000 dirhams of profit is tax free. So let's say you've got a business, you're making 10 million, for example, of revenue, and you're making $1 million of profit. The first 375,000 dirhams will be tax free, and you can pay that as a dividend. The remaining amount, obviously, you pay at 9%. So you have to be quite you need to structure your affairs in a tax efficient way. We're not obviously saying you should break the law. We're not saying that you should do anything illegal. But there are things you can do to, and Joe can help.
Thanks, mate.
There's things you can do
Yeah.
that makes your affairs more tax efficient. You know, and the easiest one for entrepreneurs is your salary, right?
Yeah.
So
Well, I was going to ask you about that. So, you know, another question I get asked all the time. So I've made £1 million in revenue. Let's just assume that I have no other costs. I'm just going to pay myself £1 million in a salary because then I pay no tax, because I pay no personal tax, and I've wiped out all my profits, so therefore I pay no corporation tax.
I love that. I love it when they ask that question.
Simple as that, right?
Yeah, I mean, look, if you own the business and you're working in the business as well, there's nothing wrong with that, right? There's many entrepreneurs who own the business and they also operate in the business as well. They should be remunerated in the right way, right? However, because you're the owner and you're the employee, you're a related party.
Mm-hmm.
So whenever there's a related party transaction in a company, there's a little bit more scrutiny from a corporation tax point of view. One of the things you have to do is list all of your related party transactions and your, you know, when you prepare your tax return. So you have to be very careful in how you do it. Now, when it comes to salary, for example, you need to make sure it's at market rate. It's at arm's length. So there's a classic terminology you'll hear with corporation tax is arm's length, right? And what does that mean? That means that if you was to do that transaction with someone who's not a third party, how would that look?
Yeah.
And so usually what you would do is you would, you know, get your CV, go to a recruiter, find out how much you would get doing the same salary from outside the market for another company. And so long as it's in that range, then it's fine. Now, we work with entrepreneurs, right? So most of our clients actually underpay themselves. Like, if they pay themselves as it is, right? So I think there's a lot of scope that they will have where they can, you know, within that tax year, if they've underpaid themselves, then, you know, maybe they need to look at what's going on and just make sure they're paid the market rate.
And that's another question, actually, if I can, that entrepreneurs would say to me is, I can't afford to pay myself, but I also want to make sure that there is a transaction, if you like, in the account that reflects what I should be paid if the money was in the business to be able to do that. So, because I know obviously some free zones have WPS and, you know, things like that. If the free zone doesn't have WPS, for example, is there anything? Is there a kind of rule that it has to be paid, or are you allowed to accrue for it? So, say I want to be paid 100 grand, and I can only pay myself 20.
Yeah.
Am I allowed to accrue the other 80, or is that not?
So, it's a good question. It's a good point, and that would happen often because sometimes it's not just you don't have the money. It could be cash flow. It could be you invoiced $1 million and you're getting paid after, you know, 90 days and you're in end of the year. So look, you have to think about, if you get an audit, you want to present your books, your numbers in the most credible way, right? You know, the tax auditors, you know, they meet businesses all the time and they know all the tricks in the trade. So there may be situations where you could accrue, but if you want to make sure that you have clean books and clean processes, and if you do have that knock on the door with a tax auditor coming in and going through your accounts, you need to show them clean books, because the risk for you is if they see one discrepancy, they'll start digging deeper, right? And you don't want to do that. You don't want to be in that position where you're having to answer lots of questions. Sometimes you have an audit and you've got literally a few weeks to respond, and you're actually running a business and it's quite stressful. So you want to make sure your affairs are clean. So I would, in this situation, advise, you know, make sure you got an employment contract, make sure that it's verified with a recruiter, that it's at market rate. WPS, obviously, if you're not required to do WPS, then obviously you do bank transfers, and within a bank transfers, you've got the transaction type, which is salary, right? So that's what you have to do, and then that means that you're not going to have these future events where there's an audit and you don't have your affairs in line. And that's the key thing, in business. I'm sure in the UK, it's pretty much the same.
Yeah, I guess the difference with the UK is, two things. One, you might not declare anything that you don't take because of the tax implications of doing so as an individual, but also you have to submit a monthly RTI in the UK.
Yeah.
So it's very difficult. I mean, you could do an annual one, but if you're a director only, you could do one at the end of the year, but then you'd pay national insurance on that big lump in one go. So here, if you don't have that filing requirement, a lot of people are saying to us, well, I don't need to file. I don't need to tell anyone what I've been paid. So I know that I'm worth 100 grand, and actually the market rate is 150. So I'm under declaring, but I don't want to physically pay it.
You could do that, but like I said, everything goes back to having consistent books. Obviously HMRC has been around for hundreds of years. FTA has only been around for 8 odd years, right? They don't have the experience of HMRC to know all of the different use cases. In the UK, for example, a lot of the tax laws goes back to certain cases that have happened. Here you don't have that as much.
Yeah, true.
So the challenges you have here is there may be situations where things are black and white in with an audit, right?
Yeah.
Whereas in the UK, in the mature economy, for example, you'll have situations where there is a lot of not just the tax laws but also case laws and court cases and all of that, which all kind of help the tax inspector or the tax auditor to make decisions on you, right, as a company. And so that's what I would always advise, just to keep it clean.
And like you say, I guess as clean, if you can be as clean as possible. If you're 10 grand short on the payment, maybe it's not the end of the world.
Exactly.
Because everything else is perfectly clean.
Yeah.
If you're declaring a 500k salary and paying yourself 50, it looks like what it is ultimately, doesn't it? And that's when it's going to cause you.
And in a normal course of business, there may be situations where a salary is late, right? So that's not the end of the world. I
guess declaring with zero interest of paying, really isn't, So just then touching, I guess, on, we talked about like kind of the rates and certain areas that may be exempt, but I guess in principle then, who is required to register? Because again, another misconception I get told, but hear quite a lot is that you could come here, set up as a sole trader, as it were, and operate under zero tax because personal tax doesn't exist here. Obviously, we know that that's not true. So in terms of the scope of people and businesses that are required to register, can you summarize that?
No, happy to do that. So one of the things that is a bit of a misconception and is a bit of a worry, especially for us, because whenever we take on new clients, the first thing we're doing is asking them, are you registered for corporation tax? Because if you're not, you get a nice, lovely penalty, right?
It's not like the UK where it's a little £100 fine that nobody really cares about.
10,000 here, right? So dirhams,
not pounds. That would be a nice fine.
Every company has to register, right? Regardless. Now, I think what a lot of entrepreneurs are, the reason why they don't really kind of take too much note on this is because everyone's used to VAT, right? You only register for VAT once you hit your mandatory tax over threshold, right? If you hit your voluntary threshold, then you can register on a voluntary basis. But with entrepreneurs, because they're used to that, they're like, I don't need to register for VAT straight away anyway. So they kind of, my view is they've taken that mindset with corporation tax as well. So they kind of think that I've set up a new company, I'm good. So long as I have my bank account and I've got my zero and I can raise invoices, I'm good. But actually the problem is that you have to register for corporation tax. Every company has to register, regardless if you're free zone or whether you're small business relief or you're, billion-dollar company. You have to register, and there are rules in terms of your time limits. So my advice is, as soon as you set up a company, register straight away. Now, there's another class of businesses which are individuals. They're known as natural persons. So sometimes in some free zones and mainland, you can have like a sole establishment, and that's kind of like a sole trader or a natural person. But the rules are with natural persons is if your revenue is more than 1 million dirhams, then you have to register. So if you're doing like a side hustle, you might be a student and you've got a side business of selling, I don't know, on Amazon or whatever, right? And your revenue is less than 1 million, then you fall under the exemption. But if your revenue is more than 1 million and you're a natural person, that meaning you're running business under your own name, then those rules apply.
Yeah. And just to clarify on if you're under the 1 million as a natural person, there's no requirement to register or to notify or anything. It's just if you're under 1 million, don't do anything. Yeah.
I mean, actually, we've actually had some of our clients, because they file for VAT, and they've actually had some messages from the FTA saying, you don't need to register for corporation tax once you hit the 1 million threshold, and then you can register, because there are individuals who are VAT registered.
That's a really interesting point. Yeah.
But they don't hit they are natural persons, but they don't hit the 1 million threshold.
Yeah, and that's a good point to clarify as well. As you said that VAT, then I thought that is a good point to clarify that just because you don't hit the 1 million corporation tax threshold doesn't mean that you haven't hit the VAT threshold. So they are very separate, and you need to make sure that just because you haven't hit one, have you hit the other?
Yeah.
And do you need to register for the other? You touched a second ago on the fines, 10,000 dirhams, isn't it, for late filing? I think that there's a time limit 3 months from registration date.
Yeah, so it's based on when you registered your business.
Yeah.
And then there's a time limit. Now, for natural persons, it's based on calendar years. It's not when you registered. Okay. So there's a shorter time period. So my advice is,
as soon as you
check, whoever's watching this, just check your FTA portal and just make sure that you're registered. And if not,
get
speak
registered.
to Joe.
Or you. Cool. So in terms of the impact that you've seen, so again, I said this to you before we came kind of on air. As soon as any kind of tax rise is announced in the UK, the first thing that's said is, oh my God, the impact that this is going to have on businesses. The budget that we had a few weeks, months, whatever it was ago. And don't get me wrong, some of the things did affect businesses quite a lot. But the immediate thing is that, oh my God, how are these businesses are going to cope and blah, blah, blah. How have you found the business community that you've spoken to? Have you found them to be, I only came here because there was no tax and now there is, I don't want to be here anymore? Or have you found them more to be actually, if you're in a jurisdiction that you want it to be super professional and upstanding, there needs to be an element of tax? How have you found that?
That's a great question. So remember, I came before VAT, right? So I saw the wave of businesses transitioning for VAT. So when I came and I was talking to a lot of businesses about VAT and how to implement VAT and how to make sure they're ready for it, many businesses were not ready, because one of the basic things you need to do to be able to be VAT ready is you need to have an accounting system. So we used to implement Zero for a lot of these businesses in the UAE, because then you can run your VAT return. And so what I found is back then there was a lot of businesses that didn't have accounting systems, or they were using Excel, or they were using something archaic like Tally, for example. Don't diss me, guys, for Tally. But they were using systems which were either on-premise or legacy systems that we would use, when we first started our career, right? Not now. And I think that's a lot of that has changed now, in a sense that, you got Zoho that's really popular. You got QuickBooks, you got Zero, you got Udo, and you got all these other kind of ERP systems that have come online that's kind of not digitized, but taken the spreadsheet away from the accounting process and made companies a lot more organized from that point of view. Now with corporation tax, so a lot of the business already have that kind of grounding where you know we're using an accounting system now for our accounting now. What I found now is some companies are actually clued up. They know what they're doing. So because they've gone through the whole VAT cycle, they were prepared for corporation tax. Now, something that's happening now that happened back then is there's a lot of lastminute.com businesses, right? So when VAT kicked in, a lot of people didn't do anything until, you know, March, when the first VAT return was due, right? And a lot of them didn't even do anything until, way into it, right? So going back to, are you registered? I feel as if there's still a lot of businesses that have not yet prepared themselves. There's a lot of businesses that are ill-advised. And I think once you get to September 2025, where most of the deadline is going to happen for corporation tax, you're going to get a lot of phone calls. Yeah. Your phone's going to be off the hook with people asking, oh, what do I do with my corporation tax? And then they'll email you, can we sign up with you now? Can you start tomorrow?
Yeah. The usual.
Yeah. So I think you're going to get that.
Yeah.
Not to say entrepreneurs are lazy. I mean, they're doing an amazing job running a business, right?
Yeah.
But, you know, for a lot of people, for a lot of entrepreneurs, you know, tax compliance isn't something that they want to do.
No.
You know, they want to chase, you know, the deal, or they want to, you know, grow a business. And so many times that kind of goes on the back burner.
And it is interesting because I'm a business owner, I'm an entrepreneur, same as you. But like we're in accounting side of it, the organization of our numbers and our data is ingrained in us, right? In what we show. Like for me, sat here, I'm like, how could you possibly run a business without all this data and information at your fingertips and stuff? But you know, so many of these entrepreneurs, either they've got so much in here that they can that's how they. You know, I speak to entrepreneurs that just know everything about their business just from here. Now, I'm personally not that way inclined. Like my brain doesn't cope with that. I have to have it written down. Same with like reminders and stuff, right?
Yeah.
I can't just remember stuff. Like when a waiter comes and goes, takes your order with no pen and paper, I'm like, there's no way they're coming back with the right food. And they do. I'm like, I've forgotten what I ordered, so I don't know how you know. So like for me, I've always been like, I need that. Yeah. But I guess a lot of entrepreneurs don't necessarily have that mindset. And so I find it really difficult. But to me, it's a no-brainer, but it is difficult. And also, I guess coming from the UK, where we've got historic 100 years of old, like you say, tax system that meant that every client I talk to in the UK understands to an extent the importance of it. But I've found here that sometimes people aren't even preparing accounts, let alone, you know, and then that's a problem in itself, right? Because then you've got 3 years worth of accounts you need to get done. Yep.
No, it's a big problem. It's a good problem for us in a certain way, because it means, you know, there's more work for us. But yeah, I mean, it's going back to corporation tax and, you know, are we ready? I feel as if a lot of businesses are not ready. And I feel as if with free zones particularly being very complicated, you know, you've got the de minimis rule, you've got lots of different nuances within the corporation tax rule for free zones. I still think a lot of big companies are not ready as well.
It's funny though, isn't it, that they've made a free zone actually more complicated than anything else, which actually is the majority probably of small business entrepreneurs, especially if they're international or you know, whatnot. It's interesting that that's the you know, I guess the what's the word, like that's the most complicated area of, maybe not the most, but one of the most complicated areas. So I think also, like you said, touching on the VAT piece, that because people had to go through VAT quite recently, to be honest, it probably prepared people to go, well, look, VAT's come, corporate tax is on its way, I've got to get it done for this, I may as well get ready for this as well, type thing. But like you said, still many people come to us without registration. But I am finding a lot more of the CSP firms are now registering people on on company setup.
Because they make money from
Yeah,
it.
yeah, of course. Yeah, no, of course. But like in the grand scheme of things, that's a good thing for the industry. That is it good that we can do it? Yeah, because we get a bit of extra cash. But I'd rather a business had it done and didn't get fined than the CSPs didn't 100%. Do it and we had to do it. But the scary thing from a CSP perspective is the misinformation that comes out of the tax advice rather than the registration piece, I guess. So touching then on we talked about free zones, we talked about particular things that are needed in the free zone to order to be exempt. Are there things that once you have your exemption you need to do in order to maintain your exemption? Are there things that can, like, you qualify for the exemption, and then you go, perfect, I'm exempt, I don't need to worry, and then all of a sudden you do a few things that wipe that away and you didn't think about it?
So with small business relief, for example, you've got into 2020, the 3 million threshold to be eligible for small business relief is only valid until 2026.
Yeah,
for example.
And when you say it's only valid, just to clarify that, it's valid. So let's say your first tax year is the calendar year of 24, 25, and 26.
Exactly.
Each of those years, as long as you're in the 3 million threshold, you would qualify for it.
Yeah.
And
there are certain nuances.
But in principle, just base it on that for a sec. In 2027, that goes in principle.
Yeah. So they haven't mentioned that it's going to go.
Okay.
But they've kept it at 2020 until 2026. Now, my gut feeling is they'll see how it all goes. They'll see who's going to claim small business relief, who's faking it, who's making it, and then they'll probably adjust it, right? How's the economy doing, right? So I think realistically, that's what I would do. I'd look at how it's going. With regards to other, deductibles, it's all, everything goes back to making sure your deductibles are for business purposes, right? Are they wholly necessary for business purposes? That's where you start with, and then you go down, right? So, there are situations, there are instances in the law where if you work from home, then you can claim some of the costs of running your office at home, right? With entertainment, for example, if it's client entertainment, then you can only claim back 50%. If it's employee entertainment, then you can claim all of it as a deduction. Yeah. With interest,
that's actually better than the UK though. In the UK, it's 100% not deductible.
Oh wow, okay. Yeah.
The client side.
Okay, so
yeah,
great reason to come to Dubai.
Yeah, exactly. Yeah.
So you got to think about those things. In terms of interest, you get a deduction for interest based on a percentage of your EBITDA. And then you got to look at, things which are for related party and not related party. So I'm talking broadly speaking for entrepreneurs, right? Yeah. Obviously for large companies, there's a whole massive checklist you need to do, and that includes transfer pricing, and that's a completely different podcast and topic.
And different host as well.
So you look at that, and then you make deductions. Now, obviously from a tactical point of view, make sure that the contracts are under company name, you're paying it from your company bank account, you are keeping records. VAT helped that discipline where you have to keep your invoices, and now you have to keep your records for 6-7 years now, sometimes even more.
Things like Dext and
exactly
other receipt scanning software, and then Xero, and keeping the data all in those systems is very helpful.
100%. So you got to keep that information as well. So, without overcomplicating it, those are kind of the things you have to think about in terms of what can I deduct. And at the end of the day, you need to be logical as well, right? So if you're gonna have a party in, Atlantis, the Royale, and put all your employees there, and your revenue's $1 million, and you spent $500,000 on that party, right? Come on.
It's got to be it's got to make commercial sense, as it were, and would you do that in the normal course of business, and all those sorts of things. What about things like travel? Like, when I say travel, I mean mileage. In the UK, for example, there are ways that you can and can't, like, for example, if I go to the petrol station and fill up my car, if it's a private car, I can't just claim back that. I've got to claim back a mileage claim rather than the petrol itself. Is that the same here?
So having transportation is quite interesting in a sense that VAT also has its play as well.
Mm-hmm.
So in the law, it states that if you have a vehicle and it's available for personal use, you can't claim back the VAT, for example.
Mm-hmm.
And that's quite a broad,
Mm-hmm.
definition. So you'd have to be careful what you do with transportation. If you're a company and if you're a maintenance company, you got, vans, unlikely you're going to use your vans to take your family out for like a school run or dinner or whatever, right? So that would usually be quite allowable. Obviously, petrol you can claim back, but from a very technical point of view, when you go to the petrol station, you can ask for your number plate to be on the receipt, for example.
Okay.
Or you can get cards where you can like get your drivers or to use that special card to pay petrol, and then they'll give you the receipts as well. So obviously, VAT point of view, some transportation is 0 rated and some are standard rated as well. So you got to think about that. But by in general, so long as it's for business purposes.
So like, using taxis and stuff for business purposes are all fine. What about if you had, because things, again, here, these are nuances here that you have less in the UK. But what about a driver? You hire a driver and they're driving you 5 days a week. They're not available at the weekend. Let's just say they're not available for personal use, as it were. Is that something that is allowable?
Well, so long as the driver is an employee of the company, right?
Yeah.
And the driver's transporting you for business purposes.
Then
right. But if he's like, it's a grey area. If he's picking you up from home,
that's what my next question was. Then, well, what becomes?
But if you're going from the office to, a business meeting or conference, it's business purposes.
Yeah.
You kind of have to be careful in what you do, and you probably want to have you can get software where you can track what the cars are doing, and it will give you reports.
Yes.
So you can use that as your documentation or evidence to say, look, this car's taking me from, Burj Khalifa, my office, to, DIFC, for example, and you can prove that. So long as you've got the evidence to prove that it's for business purposes, then you're good.
And again, I think, and I'm asking these specific questions to give some kind of color, if you like, to some of because some of these conversations are the ones that I have with other people, right? And, as long as you can demonstrate, in the main, I would say, as long as you can demonstrate you're not taking the piss.
Yeah.
If 2 or 3 of your journeys end up being private in 150 journeys, no one's going to care. But if, you've got 150 journeys and 149 are personal, you try. So it's all about balance and doing things as properly as you can. Okay, so we're coming towards the end. We've covered a lot. And the great thing about this is we've probably made people have more questions than answers, which is what we need, right?
Probably.
So people can come to us and ask us for the answers.
Well, they can come to you, right?
Well, you're my guest today, so I want to make sure that you benefit from this as well. So, why is the big question that people ask me? Why have the UAE got tax? This is supposed to be a place with no tax. Why? And then there's actually some interviews back in the day of people saying, about tax and whether or not, tax would be introduced. And why do you think it's come in?
So, the UAE was in the grey list at some point for a few years. And one of the reasons why is because, it was a tax-free country, right? And so there was a lot of work with the OECD and with the various government institutions to kind of make get the UAE to kind of be part of to mature it as an economy. So for businesses to thrive here, and they may have operations in say other countries where there's tax paying. That there is no longer an opportunity where you just dump all your profits here and it's tax free, because we're an international hub now.
Yeah,
right.
yeah.
So for us to be an international hub, I mean Dubai,
UAE,
UAE.
yeah.
We want to be part of the global kind of network, and one of the main reasons why that's happened is to enable that. Now, 9% is actually the lowest tax rate you can have. One of the lowest tax rates you can have with the OECD. So the UAE is part of the OECD. Is signed up to the organization. And the OECD is it's a global organization that kind of governs the tax around the world. And so, being a tax-paying country means that for many companies who are looking to invest money into the UAE, it ticks a box. Because if you're on a grey list, some companies won't invest in it. Now, me as an entrepreneur, I don't want to pay tax. Why should I pay tax?
Yeah.
But actually, that means that there's more opportunities in the country, because it means if there's more foreign direct investment coming into the UAE, there's more money being spent on projects, and you may have an engineering firm or you may be an architect. You can pitch for those projects as well. So, yes, there's a tax of 9%. It's not the end of the world.
No, it's still pretty low.
The chances are that you're probably going to double your business over the next 3-4 years, because the economy is growing as a result. So I see it from that point of view.
Yeah, I agree.
And if you're a small business, you've got the small business relief.
Yeah,
right?
Yeah, and if you're a holding company or a kind of head office type function, you can still maintain some element of exemption. And so, like you say, there are certain areas that they have really tried hard to. What I like about it, and it sums up the UAE for me, is how amazing the place is that it does look like they've thought about it, and they've thought about which areas deserve it to be exempt and deserve to, to have that, and which areas don't deserve it, but at the same time, they probably do fall in this category, and that means that they need to pay tax. And so it's not just stick a finger in the air and hope for the best. It does seem like a proper thought out process in terms of like which people should and which people don't need to be paying it, which I think sums up this place, to be honest.
100%.
So just to finish, a couple of quick questions for you to finish. I don't know how much you know about the GCC in general, but are there any GCC areas now that still don't have corporation tax? Someone told me Bahrain doesn't.
Kuwait and Qatar don't have VAT.
Okay.
But strictly speaking, they all have corporation tax. Oman has introduced income tax.
Okay, personal income tax.
Personal income tax, but you have to be earning more than, I think, $120,000 a year. Saudi is very complicated in its tax rules. You've got withholding tax, you've got income tax, you've got corporation tax. So it's quite a sophisticated economy from that point of view. But pretty much most of them do have some sort of,
because they all want the same thing that UAE wants, which is to be part of the global world. And do you think income tax is coming here?
Good question. I think you've got e-invoicing coming in as well now, right?
Yeah, we didn't get a chance to touch on that, but
I think Saudi Arabia has been around for a long time, and Saudi Arabia still does not have personal income tax. And if anything, with Saudi Arabia being their tax rate is 20%, for example, we got 9%. Their VAT is 15%, we've got 5%. So usually, and Saudi Arabia started with e-invoicing, for example.
Okay, yeah.
So I think if you see Saudi Arabia introducing income tax, maybe the UAE will. Maybe, we're speculating. Oman has, but Oman has for different reasons.
Okay.
I can't see it happening in, for example, Qatar, Bahrain, maybe Kuwait. But I think in the UAE, I can't see that happening for a while. Maybe it's in the works, but I think we've got enough to
deal with. And I think as well, if you want to encourage investment, as we've talked about throughout this, you throw VAT in, fine. You throw corporation tax in, fine. You throw personal tax in on top of that as well. Whatever people say, it is going to stunt some growth.
Yeah.
It's a fact. It is. So, whether you never bring it in or whether you bring it in a number of years once everyone's got used to, which is kind of what they've done really with corporate tax. They have VAT, kind of let everyone get used to it a little bit. Now corporate tax has come in 5 years later. there's an argument to say that, I mean, maybe not 5 years, but maybe 10 years down the line, there will be something that that comes in. But yeah, nothing that's on the horizon.
No, I mean, look, and also remember, property is a big thing out here. So if you bring in income tax, if you bring personal income tax, then a lot of landlords will have to pay tax. A lot of a lot of the buying and selling of property will come into play as well.
Yeah, it's a big effect on a lot of stuff. Yeah.
Yeah. So I'm sure it's been thought about. Whether it is enacted or not. I would look at the other GCC states and see what they do.
Yeah.
And then that can be like a proxy in terms of how they go. I mean, in Saudi Arabia, they increased the VAT from 5 to 15%. I think like 3-4 years ago.
Right.
They still kept it at 5% here.
Yeah.
So,
and I guess that's another route, is that if you do want to raise a little bit of revenue, is it easier to stick VAT from 5 to 10 maybe? Corporate tax 9 to 12, something like that, rather than a whole new regime around personal tax that then requires a lot of time, effort from everybody's part to deliver it. And I think that's the other thing is, it takes a lot of time on the government and the FTA and stuff as well to try and answer queries and whatnot. So yeah, they've got to be prepared for that as well, I guess. So look, I mean, I could carry on this subject. I think it was, personally, I think it was one of the most engaging tax conversations that I've been involved in. So hopefully for the listeners, it's given them some, some direction and some thoughts and some hopefully we've dispelled a few of the kind of myths and some of those common misconceptions so that people have got some better understanding. So thank you so much for coming on.
No, thank you for having me. I've really enjoyed this session.
Amazing expertise.
Tried to make it as fun as possible.
No, definitely.
If it's doable.
I mean, you and I are we're not the most boring accountants out there, put it that way. So hopefully they've had some value from that. So look, I will allow you to plug the accounting business as well at the same time. So where can people find you if they want to?
Look, all the accounts go to Joe, right? For me, my main project is Taxstar. We're developing tax technology for this market. We'll be doing e-invoicing when it comes out as well. So yeah, that's my main baby at the moment. That's what I'm spending most of my time on. So yeah. Yeah, we'll put some links in the description and all those sorts of things. So thanks very much. Thank you so much. No, thank you.